Imagine going short right here and using a trailing stop to ride this downtrend all the way down. Well, these trade opportunities are possible to spot using the Heikin Ashi trading strategy we'll discuss today. Keep watching till the end and practice this method with the activities we've prepared for you. Hi traders! In today's video, we're going over a simple Heikin Ashi trading strategy. We'll learn the entire method and practice it together with the help of some examples from the chart. With that being said, let's get into it. Before we begin, what is the Heikin Ashi technique? The three most widely used price settings are the bar, candlestick, and line chart. And then there are other less used charting techniques, such as the Heikin Ashi. The Heikin Ashi chart delivers a deep view of the market. You can use it when making trades that require precise entries and exits. It's useful for making candlestick charts more readable and trends easier to analyze. For example, traders can use Heikin Ashi charts to know when to stay in trades while a trend persists and exit when the trend pauses or reverses. So if you're on TradingView or any other trading platform, you should be familiar with the typical candlestick pattern. But if you click here, you'll be able to see all the different charts the platform is offering for traders. Among these choices, we can find the Heikin Ashi option, so simply double-click it. You'll notice that the chart has changed a little bit. Now we have long successions of bullish or bearish candles. That would make our technical analysis much easier. Remember that the Heikin Ashi candles are calculated differently, and they provide us with information that's not similar to the one we can read on a normal candlestick chart. The Heikin Ashi is a charting technique that can be used to read price action and forecast future prices. Unlike the candlestick chart, the Heikin Ashi chart is attempting to filter out some of the market noise to better seize the market trend. Simply put, Heikin Ashi is a different way of displaying the price on our charts. Heikin Ashi has a smoother look because it's essentially an average of the movement. There's a tendency with Heikin Ashi for the candles to stay red during a downtrend and green during an uptrend, whereas normal candlesticks alternate color even if the price is moving essentially in one direction. Now it's time to go over the Heikin Ashi trading strategy. There are 5 simple steps to follow. I'm going through them, and we'll have some practice examples at the end of the video to make things easier. First, we need to identify a strong move to the downside. Trading Forex or any other financial market with Heikin Ashi trading strategy should also rely on traditional technical analysis. The best strategy, in my opinion, is using the Heikin Ashi candles to trade reversals when the candles change color. This is the Euro-USD daily chart. We can see a strong downside move here, and if we read the chart horizontally, we can spot a double bottom, which is a solid classic technical setup. The two lows have formed almost at the same price level. This will remind us of the trend reversals we discussed in our last video about the Fibonacci trading strategy. So what to do next? In step 2, we need to wait for the Heikin Ashi bar to change color. I mean from bearish, red, to bullish, which is usually green. That's the first sign that a reversal is about to emerge and the price is about to go up after a long series of bullish Heikin Ashi candles. In general, the Heikin Ashi bars change color when there is a strong shift in the order flow. This typically translates into a much more reliable and solid signal than we get when trading Forex with a normal price chart. To sum up, once the color changes, it may be time to get ready to go long. So we're simply implementing a traditional technical analysis with an extra edge as we are using the Heikin Ashi chart to locate the trend reversals. Heikin Ashi should never be traded based on the color change. Otherwise, we'll face plenty of false signals. We use the price action reading skills as a filter to identify a potential trade. Once done, we use the Heikin Ashi chart as an extra confirmation element to go ahead and place the trade. Now let's move on to the third step. As mentioned earlier, when we see a change in color on a Heikin Ashi chart, it doesn't necessarily mean that the trend will reverse. It could be a false signal. The best thing to do is analyzing the candles following the color change to increase the probability of being on the right side of the market. The first bullish Heikin Ashi candle needs to have a bigger than average upper tail. In general, a long upper tail can provide an incredible bullish trading signal, especially when using the Heikin Ashi price chart. If you spot a green candlestick with no lower wick or shadow, that signifies that you're about to see a strong uptrend. Ride the rally as long as no lower wicks appear and let your profits run. If we look at our chart, we can see a bullish Heikin Ashi with long upper wicks. That satisfies our third condition. Now let's move on to the fourth step. Based on the previous indicators, we can assume that a reversal is taking place. We can straightaway place a long trade at the opening of the next Heikin Ashi candle. As usual, we need to place a stop loss. It's extremely important if you want to remain longer in the market. For more details, you can check out the video where we traded Forex and placed the same trades with two accounts, one with a stop loss and another one without it. The results will surprise you. So how are we going to place our stop loss and take profit? One of the best things about Heikin Ashi candles is how we can use them to place our protective stop loss. Due to the tendency of the candles to display a trend continuation, we can place a very tight stop loss. It can be placed a few pips below the most recent low. Regarding the take profit, I prefer to use a fixed one and close parts of the position as I'm realizing a profit. That would be the best option, especially if you're trading on the daily or weekly time frame. The other approach is exiting the market as soon as the color of the Heikin Ashi candles changes. A good Heikin Ashi trade setup will tend to run much longer than a usual price action one. When we're trading with Heikin Ashi candles, we want to get the maximum number of pips. It's important to keep our trades open for longer than normal. As we're using such tight stop loss, we're only going to need a small price movement to hit our take profit. Before we get to the last part of the video, where we practice this Heikin Ashi trading strategy together, let's look at a short setup. The same rules would apply here. We can see a double top, which means that we are at a high supply zone, and there are strong chances for a reversal to take place. The reversal would begin with a red Heikin Ashi candlestick with a long lower tail. That's a solid signal that a bearish reversal is about to happen. We go short at the closing of the following Heikin Ashi candle. The stop loss would be a few pips above the most recent high, and we exit the trade as soon as the color of the Heikin Ashi chart changes to green. Now it's time to practice this trading strategy. I'll let you look at the chart and try to locate some possible trades that we can take using the Heikin Ashi trading strategy we discussed today. Let us know about your performance in the comments section. Alright, let's begin now.